insurers are under tremendous growth pressure. They've got, targets around improving loss ratios. They have to manage risk. And I think against that background, you also have, reduced quote cycles. You have sort of downward pressure on premiums. And I mean, the key challenges that they actually face is most probably legacy IT, fragmented pricing and quotation systems that allows, that gives them the inability to actually do dynamic pricing, et cetera, et cetera. And they're sitting in a typical old estate where the ecosystem is really not that friendly, so they can't really leverage and integrate data very successfully. Now, it's our job to help them to move forward, and helping them with modernizing their pricing strategy is a great way for them to embrace the new world of tomorrow. Advanced pricing strategies typically, allow them to integrate data, run predictive analytics. It creates almost immediate automation, thereby driving efficiencies. And at the same time, they can also be, they can respond to the marketplace because they can do dynamic pricing, offer the right offers, and they can respond to market trends as and when it's needed. So I think all round it is significantly important, and also it is the new battleground for insurers, is pricing and underwriting. That is where the fight is won and lost. So we spend an inordinate amount of our time with customers at the moment within the pricing and underwriting side of their business. I think the answer to that one is if I look at sort of the holy trinity with our customers at the moment. And what I mean by that is we help a lot of customers transform with our system integration expertise, and it's mostly around underwriting workbench, it's around data, and it's around policy admin systems. And I think some of the solutions that best, that are most favored by our customers at the moment are solutions that embraces sort of predictive analytics, data modeling, real-time API in the ecosystem, and certainly most importantly, underwriting and pricing modernization. Those are the key solutions and the attributes of the key solutions that our customers are looking for. Yeah, that's a mouthful, to be honest with you, and it's quite a challenging area which is not really well understood by our insurance customers. But more importantly, they're grappling with the coverages that supports those risks, the pricing that needs to underpin those risks. And if I look at them sort of in three buckets with regards to inflation, claims, and emerging risk in the marketplace, if I take them from the top, with regards to inflation has pretty much made its way into the labor and to the supply chain with regards to cost of goods, cost of labor, and that has pretty much had a big impact on automotive claims, for example, and the rising cost of automotive claims. And the way the insurers deal with that is to pass that on to the end user in the form of a premium. So we've seen over the last 2 years, quite dramatic increase in the increases in premiums, and therefore you've seen a natural churn occur in the marketplace where customers are shopping around. But more importantly, you've also seen within the UK a consolidation where larger automotive insurers have actually taken a larger share of automotive or home insurance as a direct result of that, where smaller insurers are struggling to stay competitive within that marketplace. I think the other thing that's worth noticing is that then obviously flows directly into other areas, and one of those areas is investment income, or the erosion of investment income, where insurers typically, where they have underwriting losses, they try and plug the underwriting losses gap with some investment income. And what you've seen there is that inflation has been eroding their investment and therefore squeezing profitability. So that has definitely been an impact from inflation around that. If I look at some of the other challenges with regards to, some of the emerging risks that we're seeing with regards to cyber, for example, cyber is quite complex. It is something that is more becoming BAU, becomes part of our standard day-to-day life. And I would say it is most probably one of the more understood or potentially understood emerging risks that are coming out, where insurers are getting their heads around what the coverage is, what the pricing should look like around those. But needless to say, it is still an area that is evolving sort of quite rapidly. If I look at the claims environment, claims has been challenging because, with all the natural disasters that we have directly linked to climate change, the risk and, the coverages and actually creating and understanding risk and the models that support that, and then the pricing and how to actually bring that to market, is really, really tough. So that's been a really difficult area for for our insurance customer. And I think the other one worth noting in that space is reinsurance costs. As a result of all this climate change, the price of reinsurance has gone up dramatically. So that has also been a significant factor for our clients. So I think all in all, this is an evolving space, I would say. It is rapidly sort of going up the curve, the maturity curve, and some products or some areas are moving faster than others. But it is real and it's here to stay. And I think what will help is with the advent of modernized pricing strategies, et cetera, and the availability of third-party data that can be ingested, I think there will be more clarity around how these risks are being sort of modeled and priced and brought to market going forward. Capgemini, firstly, has obviously got significant system integration and transformation experience. So we help a number of customers transform not just their pricing strategy, but also their entire estate to be ready for the future. I think with specific reference to Earnix and the attributes and the characteristics of the Earnix platform, we can help customers to move their legacy environment significantly to a future state. And what I mean by that is customers deal currently with legacy IT, which in essence are spread across fragmented towers. They have an ecosystem that don't talk to each other, and they've got various data pools and data lakes lying around everywhere, and the complete inability to actually make use of all of those assets. With the Earnix and Capgemini partnership, I think both parties have got the expertise to move the customer into the right direction with regards to pricing. And what I mean by that is, the Earnix platform in itself drives a lot of the key factors that I would say the insurer of tomorrow is looking for. And what I mean by that is it has the ability to operate within an ecosystem which is API driven, allowing large amount of data to be quickly ingested, analyzed and understood. More importantly, it then indirectly drives operations costs because there's a lot of automation and a lot of processing that is happening without manual intervention. But more importantly, it provides for real-time dynamic pricing and data models to be understood and implemented in real time, which is what customers are looking for, which our insurers are looking for, to be able to provide competitive products, competitive pricing, and thereby attracting the customer in their market.